Well, all right. It looks like a totally dead day. I couldn't make the early edition this morning. Just too much going on. Dead day in the market for me. Looks like we had some movement, but nothing special. Looks like we sold EOI again on another account, which we had done yesterday. And it looks like we sold COF. And we purchased NHC. So let's go over those. Let's get out of this. Go over to EOI. You can see it there. Profited 15 or so. Where's it at? Yeah, there's EOI. We've already posted this to Twitter earlier today. I don't remember the exact time it happened, but I wasn't here when it happened. So that's the beauty of this system. You don't have to sit there and watch this stuff because you already have your orders in. All you're doing is collecting rent. What's the other one? COF. Yeah, it's on the same account. So see if we have any other live deals. This one didn't bring in very much because it's a high dollar, very low percentage, low dividend pair. But you know, we take what we can get. It looked like it jumped up to $1.20, 4 times, or $1.60. I'm sorry. So it's worth our time. Yeah, it only paid $1.61, so a penny over what we're wanting to get for it, but and $14.60. So again, no losses. We continue. Let's see where our chart is. We'll see what we did on the week. To about $400. You know, that's both profit, mostly profit from trading, but we still haven't overtook a dividend amount, which is fine. You know, there's no set rule. It's just a visual for everybody. So if you've got your account, let's see, Sunday, we'll have another scan coming out. I'm just looking around to see if anything else was getting close to pop, but doesn't look like it. Dead Friday. What was the overall market doing? I don't think I was mowing grass and walking dogs. Yeah, I mean, it's up a little bit. We'll see what happens over the weekend. I don't see or hear anything going on. It's just, I mean, well, that one's taken off there. Did a pretty good job this week. It went from 39. Yeah, for CEF, that's a fairly big move. You see, it's been, you know, people are jumping on this because they see the percentage and the amount of the dividend that they can get. So, yeah, everybody's buying into that. Of course, you know, if it comes up on the scan after we sell it, we'll buy it again. We're not afraid to do it again, but you have to have that occurrence. If you're not buying these and selling them, you're wasting your time. All you're doing is sitting there waiting for these things to appreciate in value. And it's a recipe for disaster. If you're not taking profits, it means you must know something that everybody else doesn't. You know, like this market's going to go up for the next 20 years. If it does it, you know, we just keep taking profit along the way. But you don't want to get caught holding the bag and then, you know, be over leveraged in any one position. Yeah, it's like we had a bunch of jumpers here. I don't know what was going on here. A lot of money came in this week. Don't really care the reason. Just looking around at some of these ones that were close to, you know, maxing out here, but they've been consistent. I can say that. That's another CEF consistent pair. I've seen this one for the last 20 years. Here's one up here, CRF. This Cornerstone Total Return Fund. It's been around since 1973. Look it up if you don't believe me. And its sister is CLM. They're both high percentage dividend payers. Now you need to look at the structure of the payouts because they do return capital as well as, they return principal as well as interest as dividends. So, I mean, it's not 100% that amount, but it doesn't matter if you're holding it, you know, because you're going to gain that plus if you sell it. I mean, it only takes 13%. It takes less than 7 years to double that or to pay for itself, however you want to look at it. A lot of people just don't get it. They want to be in and out so quick, and we don't mind being in and out. If we can hit that dividend amount, hey, we'll take it. You know, that's what we did on these, you know. All of these are dividend payers. That's what it would have been for the full year. Now, we know BST, we didn't have that in the account all that long, but I'd have to go back and look at the statements to identify exactly when we bought it, but I can tell you it was less than a month. I just know that because I see it all the time. It's a fast mover. So we're constantly taking profit. This one here, AGNC, this has probably been in one of these accounts for 3-4 years. So it at least doubled in value, well, not doubled, but half a 50% increase in the value, right? Or 50% off what you actually invested. So, and it still gave you the 122. So we're just waiting for it to come back on the scan. If it comes back on the scan for next week, we buy the minimum shares. That's what it's all about, is just keep repeating what you're doing. Stop trying to find the Holy Grail. You know, you're looking for that lottery ticket. It's not going to happen. I mean, some people get lucky. I mean, it's like, hey, I bought this penny stock and I forgot about it and I came back after 2 years and now I got $500,000 in my account. I mean, I've heard that a couple times, you know, but usually it's dumb luck. But interesting moves on the bank stocks. They're really starting to ramp up. I have no idea where they're going. Don't care. Don't watch their balance sheets. I don't watch any of it because I think any of that stuff can be manipulated. What's fact is, hey, this price right now is $9.63. I'm selling for $10.25. If it doesn't happen, I continue to get dividends into my account. That's all I care about. If it comes down here to $8.48, I buy some more. If it comes back down here to $7.60, I buy some more. My max shares, I'm already at 239. If this number changes and goes up, I can buy more shares. As it is right now, I can't buy any more because it's showing 239. Plus, I'm above my average cost, so I can't buy any more shares. I just sit there and I wait. If it hits my profit target at 10.25, I take that money and go about my, you know, now that thing, if it came up on the scan, I could buy it again. But we also know that at 87 cents, it won't come up on the scan because our minimum is $1.20. If it does show up on the scan, then we'll still buy it if it's a CEF. But any other like regular stock, this is a CEF. Yeah, Pioneer High Income Trust, that's a CEF. You need to look into them. They're good payers. A lot of folks poo-poo. I'm like, well, they just don't go up much. Like, whatever, man. You got to think outside the box. You got to spread your money around. Stop focusing on these growth stocks. These growth stocks will hurt you. I mean, yeah, I mean, sure, you can make some money off them if they split, you know, 10 times. But when they're $1,000, how many are you going to buy? The richest people in the world don't buy growth stocks, at least not initially. They got involved in dividend-paying stocks, and they just multiplied their money. And when the next big crash comes or whatever, the reset comes, just think of how much fucking money that they're going to have sitting on the sidelines ready to buy back in when this market crashes. And all the smart people, including myself, are going to be buying this stuff up. But if you ain't got any cash sitting on the sidelines, you are going to get smacked down. You're going to be the one selling to us. Because that pain's going to get so deep. You're going to be like, hey, I got 100,000 in the market, now it's worth 25. You're going to be like, what am I doing? Well, you might be collecting dividends, unless, of course, you bought into the growth stocks. And the growth stocks, they go down faster than everything else. Sure, you could always stop paying dividends, on some of these, but chances are, I don't think Coke's going anywhere. That's not a growth stock. That's a income-producing stock. All of these are. Any dividend-paying stock is an income-producing stock. We're just accelerating it by trying to get the dividends before the year's out, all right? Or beat the next dividend payment. Simple. Well, I want to make 50% on my money. I'm like, well, sounds good. If you're buying something for $1, all you got to do is go to $1.50, but most people wouldn't invest in that, would they? So when you get up here to a $70 stock, you're like, hey, it needs to go to $135 or $105, right? And what happens? Never goes there. And what are they doing? Yeah, what was it? Saw it over on was it Kramer? I don't know, on some Twitter somewhere. Or a guy was like, he was so happy that he had bought Wynn. He had bought WYNN. That's Wynn Casinos. He had bought it at $80 back in November, I think. Let's go back and look at a chart here. He bought Wynn. Yeah, he bought it back here at 80 bucks, right at the top. Now, right at the top of this candle, I don't care what the price is. That doesn't mean anything. Everybody could have been thinking that was the top. I don't care what the price, what the candle shows. It's meaning you can make these all the same color. It doesn't matter. It's meaningless to me. But what he said was, and I quote, "I'm still holding." Okay, today. He's still holding. Now think about that a second. It doesn't pay dividends. It's been as high as what's the high on here? High of 143.88. So if that's true, he's up 68.33. I don't know how many shares he has. He hasn't made any money, okay? Because he hasn't cashed it out. It's like the guy in the casino that's got all these chips. He just keeps on betting, right? Well, like, he doesn't understand if this comes back down to 80, he still owns it, sure. He hasn't made anything. I mean, I don't know how many people out there think like this, but I mean, I'm baffled. I keep seeing this type of talk, and I'm like, is this just like disinformation? I mean, are people this stupid? I mean, I don't know. I mean, he must know something I don't. But if you're looking at Wynn, and you're like, hey, I'm just going to hold it until some guru tells me to get rid of it. What the hell is wrong? Like, take the damn profit and go buy something else. I mean, I don't care. I mean, it's his money. He can do what the hell he wants to do with it. But if this is your kind of strategy, that you got your 401k, and let's just say this is your portfolio and it was worth 80 bucks, and whatever you're invested in, some ETF or whatever, all your money's in there, and right now it's at 131. You're sitting there going, man, I'm gonna have a ton of money when I retire. You need to call your broker. Sell some of that, sell half of it. I mean, take some damn profit, because if it can do anything, right? It could go to 400, but it could also go to 0. I mean, I doubt a casino is going anywhere, but just the hope that this thing is going to go up because somebody's told you that, I guess, you idolize, is telling you it's going to go up, that this is a sure bet to the upside, I mean, why not take some profit and go find something else that's maybe a little cheaper, or have an idea of when, like, he should have taken profit back in here somewhere. He could have taken profit up here somewhere. I mean, this thing could have been traded a number of times. But the big problem he's got is his money is doing absolutely nothing because he's not selling it. Okay? It'd be different if somebody says, hey, yeah, I'm getting ready to sell it if it goes below 125. That's the lowest amount. Or let's say 120. And he's just following it up. He's like, okay, well, if it goes below 130, I'll sell it. I'd be like, hey, that's cool, man. But, you know, you can do better if you're looking into some of these dividend paying stocks, because you had to wait all that time, right? 9 months. Well, in that period of time, maybe you got a dividend payment here, another dividend payment here. It all adds up. But I doubt he had just one share. But either way, I mean, it's up to people to make their own decisions. I just find that just mind-boggling. Maybe you've seen that before. You know, if you're trading like that, maybe you need to take a step back and think about it. You know, people criticize me all the time, and you know, don't know what I'm talking about. And it's like, okay, well, you know, I mean, first off, you don't know me. I'm showing you something that works, that has no losses. I'm growing the money, and you still can't grasp it. Why? Because you won't take the time to look at it. I don't care. You do what you want to do. But, you know, when somebody comes at us, well, you can't make any money that way. I don't know how to respond to that. Been doing it for, 25 years. I'm just showing you 3 small accounts to try to show people how to do this, because I don't know what they're teaching in school. It's just craziness. Protect your money. Don't, you know, everybody wants to get rich quick. I mean, you can get into this. You know, there's other ways to do this too, with dividend paying stocks, but a lot of people won't, you know, they follow some site and they don't think about how that site is put together. It's not meant to make you fail, but there's a built-in advantage to the house, right? Especially with options. I mean, if you understand how to use them, you can make some money with them, but they're very dangerous if you don't know what you're doing. I won't show any of my strategies with options because it's very one-dimensional, and I'd get criticized, and I don't want anybody, you know, saying I told them this or told them that. So I don't tell anybody anything. All I can do is show you what I do, and you can make up your own mind. But yeah, this is a typical Friday. And well, we're still in the second week. Yeah, we're just at the end of the second week, so we might get some, you know, upward motion tomorrow. Or I'm sorry, on Monday. I keep thinking it's Thursday for some reason. But yeah, I mean, we have no idea where these are going. You just, you know, when you get home from work, if you're working, just take a look. You know, if you want to sit in here for 20 minutes or whatever, just going over your portfolio. Main thing is, are you pulling these numbers down? Are you making these occurrences, right? Because the dividends take care of themselves. All you have to be doing is targeting your profits, right? So this is just simplified for everybody. Like, we're targeting the dividend amount to make it easy. We can go in more depth, and I go into this in the ebook that's coming out, where you start thinking about the average price of things and what the price is right now. Because the price, whatever the price was 20 years ago or last week or yesterday, makes no difference on what today's price is, right? All we're looking for is how close. Let's put it this way. If this particular stock, T-Row, T. Rowe Price. If the stock price is 179.37 right now, does it have a better chance of hitting 185 or 180? What's the probability of hitting 180 versus hitting 185? Well, it's a lot better to hit 180, right? So if you're targeting something further away, your chances go down in both directions. So you want to stay as close to the price and still profit and make those occurrences. Like this thing, well, T. Rowe Price, I don't know why it's jumping around like this, the end, but you know, it could jump up and hit that, and that's a much better price at 182.15, and all we did was target $4.32. So at one share, we'll profit 130 or 432. It's just a simple strategy, and we show everybody what we're doing. This is what it's making. Simple strategy. Right now we're at 617, and it's 6 days. So it's $100 a day. Dividends and profit. We're not even being paid dividends yet. We had the big one here for $236.96. That's just a culmination of, you know, a cumulative amount of dividends all being paid on the same day. Once you understand how dividends are paid, your account just keeps growing. What we're doing is trying to increase these amount of occurrences. So we want that 332, we want that 224, we want it before June, and we want it before the year's out, right? Because June 3rd, it's only paying us 56 cents. We want the whole 224, right? If it doesn't happen, so what? But we're not into it for a huge amount. I don't know if this is going up. I mean, the dividend's still a ways away, right? You got to give it time. These are weekly charts. So you have to think outside the box, and you have to be a little bit more. If we're profiting every day, it means we've been in the market for a while. If you're just starting out, it's going to take you at least 30 days to start seeing it. After 90 days, you're really going to start to see it, because now you've got these quarterly pairs, and it all depends on the date. Now we have people that chase dividends, you know, that we've taught this system that look at the dividend, ex-dividend date, and you can go to any financial platform and they'll give you the information. I mean, you can see it on ours. Say, hey, what's happening on April 22nd? We look up here. It says April 22nd, that dividend amount is being paid. So they're like, what's today? Today's the 21st. Okay, I'm buying it. I mean, that's just a different strategy, and you can do that. I mean, I'm not against that. But the whole idea is what's your target going to be? Like, how much are you trying to profit? Versus, you know, you got to be trying to get as many occurrences as possible. That's how you're going to make money in these markets. You're not going to make money in these markets by saying, hey, I'm going to buy 100 shares of this and I want it to double in price. You're going to be waiting a long time. You want to be as close to the mean. Whatever the mean in my book is what you paid for it, right? And that's going to change from day to day. So if the price is going up, now your mean's that much closer to your target price after you've bought it. Your chances are getting better and better, but it's still 50-50, okay? But your probabilities of it happening are much better. But the further out you push your price, the more profit that you're trying to make, the harder it is for you to get it. Just easier if you stay around the mean. Now we talk scale. Once your account size gets bigger, now you're demanding more money for the same move. It's just a numbers game, folks. Don't be swayed by the quick money. A lot of promises made out there, and you can dabble in it if you want. Maybe you get lucky on something, but 9 times out of 10, all the strategies have already been tried out there, and unless you've got some supercomputers and some really, really good algorithms, you're up against pros. They will take your money. It's easy for them because they can run a market in any direction they want, and you might think that you're trying to outsmart them and you're going to make big money on it. Unless you've got a huge bankroll, you can forget it. They're going to take it, and because they know how many people are in the market, they can see the orders. I can see the orders. When you start looking at this 2, 3, take a look at time and sales. That wash, whatever that is, just some stock that pays. You can see the size of the trades: 18, 5, 20, okay, 100, 100, 198. Let's look at another one. Main. This is CEF. Okay, a lot of trading going on there. Doesn't move much, but look, 258. It's a fairly inexpensive stock. So I mean, yeah, people, what they do, they've got a little bit of money. They're like, hey, this guy is probably targeting, 10 cents. Who knows? Maybe he wants $100, so he needs, a 3-cent move or a 4-cent move in the stock. And he wants $100. Right? But he's risking a lot. I mean, I don't know the size of these people's accounts, so I don't know what he's actually risking versus what he's got. But what'll happen is you'll come in here and the default's $100, and you're like, oh yeah, okay, I'll buy $4,100 worth of this CEF, and if it doesn't work out for me, then I'll just be stuck with it. And you got 10,000 in your account. Well, it goes down $1. So now you're just sitting on it. Nothing wrong with it because you're making dividends, right? But if you had to spread it out, maybe you do a little better. Now you're stuck with this. And there's, like I said, there's nothing wrong with collecting the dividends on it, but you're really hurting yourself because now what have you got? You've got maybe two. If you do that again, you just ate up the $10,000 in your account, and now you can't trade because you're looking at everything going, all I have is $10,000. What can I do? You can't buy anything else, right? Because now you got two positions, and maybe they're just both bringing in dividends. So now you go back to work, and you're just collecting the dividends. Maybe they're both CEFs, and you get that monthly dividend pay. Nothing wrong with that. Maybe you get that 9%, and then maybe it takes a year or something for that price to come up. But the second, what most people end up doing is they realize their mistake, and what do? They sell at $1 lower, so they lose $100. Takes you a long time to get that $100 back, especially with a small account. But people will tell you, it's like, had you just sat in that and collected that dividend, and maybe you get that 10%. Maybe you collect here, right? So in a year, you got on 100 shares, you ended up getting $12.30 or $120, right? So instead of taking the loss, you increase the value. But see, people get impatient. They don't think the trade through. So what we're doing is we're tagging all these small ones, putting a small amount in there every day. It just depends on, we use a scan, and we say, okay, how many can we afford to put in? This particular one, Pfizer, right? 46 shares max. We have 15. So we still, and this can change. If it comes back up on the scan, we can't buy it right now, right? Because it's above our average cost. But if it was down here when it comes back up on the scan, we could buy it. And then we just look at the max shares. This can change. But as it is right now, we're still only a third of the max shares. And it could float around down here for, I don't know, next couple of years. Don't care. But what's it doing? Paying that dividend, right? $1.56. Just increased its dividend amount. When did it do it? On January 21st. So the next payment is May? Is that right? The heck? Yeah, May. That's weird. January, May. February, March, April, May. That's like 4 months. Whatever, whenever it pays, it pays. But you can see it down here. Looks like it had a spin-off over here. Spin-off date 1. I don't know. I didn't pay attention to it. Doesn't matter. As long as it's paying dividends, doesn't matter to me. So, but yep, not a bad week. Pulling some cash. Stop comparing your money to other people's money. take a look. If you want to follow this small account each month, we put out, well, it's not this one. This one here, you know, we only have, what's the total in this account? Like 27,000. Okay, so right now, of that 27,000, only 19,000 is invested, so it's earning 5.74%. Now, because we trade this, we can look at the what it's actually doing, right? So this is what it's brought in, right? That's over and above the dividends. These are not dividend payments. Dividend payments just go into the cash account, right? So it keeps growing. These are realized profit and losses. If you had a loss here, you'd see it in red. So you keep increasing the occurrences, right? And this value over here, if the dividend yield per year is 574 and you sold each one of these before a year was at, you'd average another 5.74. That's 11.48%, close to 12, right? Nobody's doing that in the market. I'm saying this market is steadily going up. We don't know when it's going to turn, but when it does turn, these will go away, right? Because you're not making anything, because there's going to be some that continue up. I mean, the market doesn't crash overall. In some cases it will, you know, certain things will follow the market, but others are just not correlated. But if that happens, you can depend on your dividends, right? And this value is going to increase, the 5.74. It doesn't mean you're making any more money. It's just when the prices start to come down, the yields go up. This is the thing that most people don't understand about money. So they're watching, you know, all these gurus on TV, and they're telling you the yield this, the yield that. And I mean, the yield is not something you need to concentrate on. As long as it has a yield, that's a good thing. But we try to target, like, CEFs, we're not too worried about the dividend amount, okay? But stocks, we want a minimum of $1.20. And, you know, if it's growing, better. Let's see, this one was 137. This is trailing 12 months, and this is current. And you can see the schedule, right? It's every month. So that's 5.7%. Now, if this stock price comes down, this yield is going to go up, even though this dividend amount stays the same. So that's a key. You need to understand that. So when you start seeing these massive yields, when the market crashes, everybody's jumping on those, right? And it continues on down. So you got to know when to get in. Our scan helps us with that. It doesn't allow us to buy into noise and stupidity. No emotion trading. This is just strictly rules-based, very mechanical. Say like this one here, CFF. It looks like we bought that back 315. So we've had it for coming up on a month, right? A couple weeks. Well, 4 weeks. Next week will be 4 weeks. So if it hits that alert, we're going to put in a buy, and we'll have to look at this and see if that's still the max shares. We have an algorithm for this, but if it is, we're going to buy another 2. So we're going to dollar cost average. Our average is going to be around the 45 mark, and we're still targeting that amount, that dividend amount, which is $1.52. So we'd end up with 4, multiply that by, and that would be 6, right? Otherwise, what are we doing? We're collecting that dividend amount. Now, I know it doesn't seem like a lot, but you have to think like a grocery store and turn your stocks all into cans of beans. Think about if they're selling a can of beans for $1 and they're making 10 cents on every can. Well, if you're selling it cheaper than everybody else, chances are you're going to sell it before everybody else, because they're same beans, right? Doesn't matter, same stock. But if you're trying to get it quicker than everybody else, because everybody else is like, well, I'm not taking any less than 20% on my money. If I'm buying up at these prices, I want to get paid. Hear that all the time. You need to be, the other side of it is if you had 1,000 shares of something, you only need a 1 cent move, to make $100. So we're not, you have to manage your money based on how much you have. Manage your risk first. So we're looking at this account here, and we can go max shares of 23. And let's just say this market comes down. Now we're fully vested. We've got all our money in the market. What's happening to all our money? It's growing exponentially, right? Because each month we're getting paid, and every quarter we're being paid. So even if the market's down, we're getting paid. And maybe we don't trade for a month. Maybe we don't trade for 2 months. I don't know. I don't have a crystal ball. But as long as you keep, a focus on your risk, what's going to end up happening is you're going to have more cash there when you see this market continue to come down, where you're going to be able to buy even more at an even better price. And as long as you're not trying to, well, I think it comes all the way down to $30 on this one stock, and you say, hey, I'm going to buy this last one, it's the last bit of money I have, but I'm never going to sell this until it gets back up to where it was before. That could be years. You just don't know. You need to take the profit now. I'm still going to target the same dividend amount. If the dividend amount comes down, I'll sell it for that. That's how you manage your money. You're trying to get that money before somebody else does. Always be ahead. Don't wait. Make those occurrences. It's a numbers game. Hey, sometimes you're going to get lucky when the market starts to go back up. You look back over here. This is interesting. Let's just say you bought at 32.07, right? And the next morning you wake up, the open was 34.14. You could trail it. If the dividend amount was $1 something, you could trail it and say, oh, I'm just going to sit in there, and whatever the dividend amount was, I'm just going to put a stop in right there. So if it comes back down, I'll make that money. You sit on that, and there it goes. Maybe you only had those 2 shares, right? 2 shares at 30. It goes all the way up here to 50. This is how you can get in, but you have to be thinking in the future. If you're looking at this past stuff, you're going to get hurt so bad, because this means nothing. Picture what can happen. This can go up and it can come down. All I'm looking at is like, well, I mean, it could stop on a dime here and go straight back up. I've got plenty of, what is it, BIT? Let's take a look at BIT. BIT's a perfect example. No, not BIT. Which one am I thinking of? BTZ maybe? BTZ. Yeah, okay. Come on down, right back up. Right? Came all the way down there. Didn't hit, but it actually had picked up the other, so we dollar cost averaged, and we're still targeting that. But the whole time we're collecting dividends. So, but yep. All right, enough babbling for today. Whoever picks up on it, picks up on it. Hopefully you're the one that stuck around. And if you're watching this after hours, just put it on slow. Sometimes I get talking too fast. There's no trading going on in this particular one. But we'll see what happens on Monday. Hopefully Monday is a little better day. But thank you for your time.